Hello, everyone. Welcome to the webinar. My name is Budal Shakur. I'm going to be representing eToro here. And today we have with us Mr. Jeppe Kirk Bonde, who is one of our leading popular investors. We're going to start off with Jeppe giving us a few words about himself.
Well, yes. So my background is from management consulting. I used to advise tech companies and banks. And then one of our core products was valuations. And then I started investing on eToro, and that started going very, very well. And then more and more people started copying me on eToro as well. And then eventually I just decided to focus 100% on my investments. And since then it's gone even better. And so, yeah, that leaves me where I am today.
Very nice. Very nice. So I have a couple of questions for you, if you don't mind us you answering them. The first one we're going to start with is, what really got you into trading?
Well, actually, so when I was starting to make some money from my consulting, I had some extra money that I wanted to invest. And then actually I was looking at sort of the different offerings from our company pension fund and various banks. And then I thought of them as quite actually high risk, low return. And I thought, okay, I can definitely do better than that myself. And then I started investing, and haven't looked back since.
Very nice, very nice. And what particularly made you choose eToro? What made you join eToro in the beginning?
So similar to how when you are making large investments for a bank or picking a new piece of software for a bank, then I made a spreadsheet looking at the different factors, weighing all the different options. So I considered all the different brokerages, or many of them at least, in terms of how good the website is, the mobile platform, what instruments are available, and their price. And then out of these, I thought only 3 of them were really viable for me. And then eToro came out as number 1. And then since then, I think eToro has also accelerated away from the other competitors since then. So that leaves me quite happy with having chosen that platform.
I'm glad to hear that. I'm glad to hear that. What year did you begin, if you just share with the audience?
Yeah, so I started investing on eToro in 2013. So 6.5 years ago.
Very nice, very nice. So you've been with eToro longer than I have. I've only been here for 4 years.
All right.
Speaking of the audience, I'd like to mention that we're going to be taking questions from the audience towards the end. So please keep in mind, keep your questions towards the end, and we're going to pick a few people to ask directly Jeppe some questions. Now, going back to the question, we want to understand a little bit more about your trading strategy. You know, where do you do your research? Take us through the steps that you take before you actually open a trade on your account.
Yeah, so it's sort of at the very highest level, I analyze the mega trends that are driving the global growth in terms of politics, society, and technology. Then I take a view on how I think the global growth will be, in which particular countries, regions, industries, segments, business models I think will see a lot of growth. And then within that, I then try to pick out the stocks that I think are particularly undervalued, ideally where I have something that I think is a really valuable company based on its strategy and financial statements and, you know, all the sort of insights I can pick up. And then if it's not priced, all of that greatness is not priced into it, then that's something I want to buy. And I often get my ideas from, you know, people writing on eToro or from just my online and offline lifestyle and whatnot. And then you know, then you just need to sort of add the analysis of the financial statements, try to read through the lines, you know, see what's not being said. And there's just a lot of good content actually available. You can also attend investment conferences and see, you know, if you can talk to someone from the company and whatnot. There are all sorts of ways to get an angle to really sort of get that consultant level understanding of, you know, if I was to advise this company, what, you know, do I feel that I know enough now? And, you know, immediately when you start out researching a company on industry or whatever, you definitely do not. But after, you know, 6 weeks or so, you really feel like, oh, now I'm reading the same things again. And yeah, I already know that. And then you start to feel like, okay, I get this now. If there was something I was completely missing, you know, that was actually attainable in terms of knowledge, then I would have gotten that already. Yeah, so that's essentially my research process. And I use both, you know, some sources that I pay for and some that are free. And, you know, some are sort of just based on what you're interested in and what you happen to look at.
Everywhere, making a decision out of that.
Yeah.
Very nice, very nice. Now, you're one of our top copied investors on the platform. You're actually in second place right now, only to Olivia. And you're copied by almost 7,000 users right now. And obviously, they care a lot about where you're putting your money. So which instruments do you focus on? And give us a reason as to why you focus on these specific instruments.
Well, so I think currently the best asset class is stocks. I think that's got the highest average return based on how much, compared to how much risk it's going to take. So that's where I put the most of my money right now. Then in terms of, I have a little bit in different industries and different regions and so forth. I'm slightly more leaned into America, slightly more in tech, slightly more in biotech and some other high growth industries. But fundamentally, whenever there's a stock that I really, really like, if I could only invest in one stock, I would probably pick the one that I believe in the most. That's really, potentially to give a high return. But then you would get zero diversification. So I also sort of quite often, even if I have a stock that I believe a lot in and it's grown to a big size, I will sell a bit off to get it sort of down into a proper overall risk profile for the whole portfolio.
Very good, very good. Do you anytime feel some sort of pressure by having such a large amount of people, such a large amount of money being copied?
I wouldn't call it pressure, but there is definitely some responsibility. A lot of my friends and family members copy me as well. So that's sort of, there is some different responsibility to keep sort of, investing in the way that I think will give the highest returns at an appropriate risk level. But fundamentally, when I started out, I said, I'm going to invest my money the way I think I can make the best return for myself. And that's incidentally also worked very well out for all the people who've chosen to copy me. So I think it's sort of, we are quite aligned. Like what's good for me is good for them. And it works together quite well like that.
It's a win-win situation. Obviously you're looking out for your own money, and with that, you're helping all your copiers. Now, how do you feel about being one of the most copied investors on eToro?
I think it's being a popular investor on eToro is a great way to sort of leverage your investment abilities. So if you're already good at investing, then you just get that extra benefit from that. And I think it's a nice way to sort of, you can interact with the community and then go to various investment conferences. And, eToro even invites us to some like concerts and football matches and whatnot once in a while. So I think that's all overall quite I don't know if it's a dream job, but it's definitely a quite exciting job, I would say.
Very glad to hear. Very glad to hear. Now we're almost at the end of the year. We're almost starting in December. How do you see yourself finishing at the end of December?
Well, so far I've made 34% in 2019, and my historical average since 2013 has been 32%. So I generally like to think more in terms of years and decades rather than like days and months. But, if we have to take that average, then you'd say you'd get between 1% to 2% more and end up at something like 35 or 36% at the end of the year. But again, yeah, any given month can be up or down by, up to 10% quite easily. And then in the long run, if it averages out to a good result, that's what really matters.
Interesting. And all you're generating these percentages, and you're trading with stocks with leverage, or do you ever use any leverage for your trades?
No leverage.
So this is outperforming many of the different indices on a yearly basis. To be over 30% is something magnificent. That's very, very difficult to achieve. Now, I wanted to ask you, what made you decide to become a popular investor? Was there something that made you make that decision?
So I received the email from eToro that this was possible, and then I just filled out the online form, and then then suddenly I had 10 copiers, and I thought, oh, that's sort of funny. And then 100 copiers, and then suddenly 1,000 copiers, and maybe one day I'll reach the 10,000 number. But yeah, we'll see.
Hopefully after this webinar. Now, do you have any message that we didn't cover, something you'd like to tell all our viewers? Of course, please try. We're going to make it not to be advice, but just any specific message you'd like to share.
I think in general, it's good to invest. It's good to sort of always consider the high long-term returns one can get from investment. Stocks has over the last 800 years delivered on average 7% real return per year. Property's been good as well. But if you start to think of it in terms of that you can actually double your money in a decade on average, and that's just on average, then you sort of, whenever you're spending money, you almost feel like, I could be buying stocks instead while I'm spending this. And that's sort of this makes you smarter about decisions in your everyday life as well, always knowing sort of, you can do something today that's going to benefit you for many years to come. And and the stocks is one good investment. You can invest in in education, many other ways as well. But definitely, if you have some excess cash, investing in stocks is something one should look into, I think, for many people.
I agree. And an easy way to do it is just copying you. You don't have to do the analysis yourself or do any sort of research. You can just go onto eToro and just copy with you how much they're comfortable with investing on you. Now, the last question, of course, many of our audience is waiting for this, but can you give us some of your thoughts on cryptocurrency?
Yes. So in general, I'm a big fan of financial innovation. I like the idea of private currencies, like tokenized assets and smart contracts and whatnot. But I'm not a fan of blockchain. I don't think it's a very good technology. I think it's too secure. I think Bitcoin is successful despite being on the blockchain, not because of it. In general, you have sort of, if you imagine that everybody were to sign a contract in blood, we probably all remember that contract quite well if all of Earth had signed it. And so that'd be very, very secure, but of course, way too secure. And so you sort of, you have to balance sort of scalability.
How can something be too secure?
Well, it's in terms of what you lose in other aspects. So what is really the problem is, of course, that it's not scalable enough, right? Because you focus so much on the security that it's not scalable at all. And there are some mathematicians that are working on solving some of the particular problems. But sort of if they actually do solve these things, then it's basically not blockchain anymore. Then it's like we might still call it crypto, but then it's fundamentally something else. But sort of if you imagine that you have, let's take some examples. If you have like you want to make a platform where people who own container ships can meet with people who own like port terminals. And then you want to have that controlled in a decentralized way. There are many other ways you can do this. You could just have like that set up as a joint venture where each of the participants owns one share and has one vote. Then it's decentralized. And if you want to have it decentralized, you can do that in other ways. But actually, for most projects, you don't even want it decentralized. Centralized works better. So if you have a marketplace where you want buyers and sellers to meet, like Amazon or eBay, it works quite fine that all the buyers and sellers can meet on this central platform. And if someone wants to change the color or add a button or whatever, they can do that without having a vote amongst all the participants. So I think even if you want a decentralized model, you don't usually want to use blockchain, and most of the time you don't even want to use that anyway. So that sort of leaves me with saying that most blockchain projects are not really viable. But that said, Bitcoin, I think, is great because it's sort of like in pole position to be a private currency for the world. And if some of the technology challenges, then you don't even sort of you can solve the fundamental ones of blockchain, but you can also just sort of like do some add-on stuff, because essentially many blockchain projects try to be both, the currency and the transaction system. And to be a successful project, you don't have to be both. It's more than enough that you're one of them. And like historically, when we've been trading gold, you used to have to move the gold back and forth. Nowadays, when you trade gold, you're swapping, changing the ownership of the gold. We're not actually moving the gold back and forth. So gold can remain sort of like, and has remained for a long time, that's store of value or medium of exchange. But the transaction systems for it have changed, and that could be the same. So you say a Bitcoin is in the block, is in the wallet, but you have a different system that's always changing, that shows who owns how much of each wallet, and then you sort of get the speed of the transactions on a different type of technology. But you might still at that point have a Bitcoin as the private currency, and then just ever-changing transaction systems. So on that regard, I would still see that there's definitely a future for private currencies and others as financial assets, but they need to rely on better.
Not necessarily as an investment. Do you have a specific percentage you believe people should allocate to cryptocurrencies out of their total investment?
No, I mean, currently I have only a few percent allocated, and I used to have next to nothing, but then that tiny bit grew all the way to comprise like 15% of the portfolio. Then I sold off to make it down to 5%. So it is. But at the right time and place, if there was the case, hypothetically, that some of these mathematical challenges were solved, or something like the Lightning Network or a similar sort of secondary layer project were to actually take off, or the Bitcoin price fell enough, that would probably lead me to invest massively, because then I would see it, right, I'm taking some risk here, but I really think that the return might be worth it here. So yeah.
Very good, very good. Thank you very much. Those were our questions from eToro, and now we're going to be taking questions from the audience. We already have a couple, but if you have some more questions, please keep them coming. We have one question from Kinoy asking if eToro is your primary income.
Yes, it is. So essentially, I have multiple streams of income. So I have my investment portfolio, but I also have real estate. And I think so I rent a flat out and make some income from that. And I think if you look historically, stocks over the last 800 years, the two best investment classes have been stocks and real estate. And I think many people they own a flat, or own a house, and then have some stocks as well. And that's quite a good way of having your money placed.
That's when you're set. Now, we have a question from Mr. Mondego who says, in your opinion, which is the best electric vehicle stock at the moment? Is it NIO, Tesla, or something else?
Well, I like Tesla very much. My only big sort of like a thing that I haven't been happy with is that besides building Tesla so wonderfully, SpaceX hasn't fallen under this umbrella. So, unfortunately, I'm only an investor in SpaceX via my stocks in Google. But I like Tesla very much from the start. And it's one of the stocks that I've, had the most complaints about, with people telling me, shouldn't you be selling this Tesla? And, why haven't you gotten rid of this one? Clearly, it's never going to work. And, people coming with the argument that, look, how many cars Ford is selling? Tesla's selling way fewer, yet their stock price is similar. How can it be? And I've always, along the way said, well, remember when, people were saying that about Amazon and Barnes & Noble, like, oh, why would you invest in Amazon? Barnes & Noble are selling more books. And I held on to Amazon as well and Tesla, and they've done very fine. And I think Tesla will continue to do very fine.
Now we have another question asking, why did you sell? It was from Ristio asking, why did you sell Goldman Sachs a few weeks ago when it is still selling so close to book value, which is $216 a share, with an acceptable return on equity of almost 9%?
Well, I can't give the full overview, but I keep track of it. I have my little overview with all the different banks and investment banks, comparing all the different numbers. I continuously watch what is the CEO saying, what are other people in the industry saying, and then that gives me an indication of which segments of banking and investment banking I think will be the most profitable, and which ones I think will not be as profitable. And then in that overall sort of evaluation, I thought that there were better investment opportunities. Essentially, I have a list of like 100 companies that I follow, but I only have 30 companies I've invested in. So there are other companies that I see as good investments where I'm like, yeah, Goldman Sachs, probably a pretty good investment, but just not good enough to make it into my sort of like the 30 that I want there. But, if the price goes down, or there's suddenly, there's some new announcement, or I see some other sort of like, wow, this thing is better than them, I could happily invest back into it again.
Understood. We have a question from Chris06 who says, do you think there will be any recession in the upcoming years? And if so, how much would it affect your portfolio?
So I think, my base rate is that we will have low growth, not a recession, in the next 2 to 3 years. I think, when growth is decelerating, the news story very quickly becomes, right, the growth is decelerating, then it must just decelerate right into a recession. Yeah, that can happen, but it's not the most likely outcome. So it's not my, biggest group of scenarios that will have a recession. Now, it could happen, and if it does happen, I do have some assets that I've picked out that I would then buy more of, because I think that, depending on exactly what causes it. Situation. Yeah, I think there are definitely some companies, and the market at large could fare badly. There are some here and there I think could certainly actually take that as an opportunity to establish themselves quite well for the long term. But that said, my overall sort of a base rate is to have low to moderate growth. It's not to go into negative growth globally.
Very good. We have a question from Mr. Johnny Stocks. From his name, he's obviously a crypto trader. And he's asking about your opinion on Disney stocks.
I think that's I've been a long-term Disney shareholder, and that's been quite fine. It's something that I could invest in again, possibly. I think content might eventually be king. and they definitely own and manage a big, a large amount of creative assets, and they manage them quite well. So yeah, that's quite nice. I'm not gonna go into my further analysis there because I'd rather have other people continue to misvalue that stock than give them all my views.
They actually had 10 million registered users when they initially launched the Disney Plus from their first day. So they are definitely a stock to keep track of. Now we have another question from Santiago, who says, I see Jeppe, so I see you have invested in Tesla. How successful do you think the new Cybertruck will be? And also, where do you think the stock price of Tesla will be in the next 2 years?
Yeah, so I think neither of those things really matter that much. I think you have some stocks. We have some stocks where it's sort of more make or break than others, and you get a fair rate based on that. But Tesla is a company that's doing something new. It's much easier to predict a company that's doing something that's been done many times and can continue to be done that in the same way. So it's sort of, yeah, I don't think the Cybertruck's going to be what takes a Tesla to the moon, and I don't necessarily think that the big spike in the stock price is going to come in the next 2 years. But I think they are working on some technologies in some very interesting areas with some of the best engineers in the world, and some key pieces of innovation can come together from that to certainly make it no longer seem like a electrical vehicle company, but actually a autonomously driving general vehicle company. And at that point, then it's a completely different valuation you're looking at.
Of course, it's much more difficult to analyze a stock that doesn't have any background data or something that's never been done before. Now, we have another question asking what your view is on the Brexit. How do you think it's going to affect the European market?
Well, I mean, overall, the European markets are not looking that great. If you look at how China compares and all the different metrics in the US, Europe is definitely the sort of the one lagging a little bit behind with higher unemployment and and not as great growth. And I think you have definitely some international relations concerns globally that are weighing on people's outlooks. So whether it's US, China, or UK, Europe relations. But I think for the European Union and the UK, you sort of for different companies that you can sort of set up different scenarios for what say that you have a potential of getting like a 2% on 8% tariff if a certain Brexit outcome goes out. Then you say, okay, if it is the worst case with the 8% tariff, some of our customers, they will just pay the extra price. Some you have to sort of either actually physically move some activities, or you might just have to legally swap some activities, and you can sort of like make a plan for that. And then at the end of the day, you'll probably be okay. But the main concern is then maybe you've wasted a lot of management time and you've wasted a lot of political capital. So if all civil servants in the UK and many in the European Union are spending 30% of their time on this, sort of over a whole decade, that's time and effort that could have been spent on something else. But then with sort of like, can the European Union really pull itself out of this sluggish growth? I think that's I'm not sure that that'll be from the European Union initiative that'll necessarily happen. I think there was, when we had the sort of like energy directive and the telecommunications directive back in the day, there was more like concrete value in standardizing stuff. And nowadays it's more unclear what is the, if we can really get high enough benefits from the regional office. In many multinational companies that I work with, we've sort of downsized the regional office a little bit, because you sort of say we have global issues and we have sort of culturally local issues. And then you're like, but what is the role of the regional office? What is the role of the regional entity here? Same goes for ASEAN and NAFTA. And sort of, so you need to sort of look and find some really clear initiatives to that regional office to really make sense and drive that good value. Besides, the sort of long-term ones who say that promotes peace and other things.
Of course. We've been talking about a lot of stocks. We're going to jump into commodities a little bit. So I'm going to combine two questions together, Sereno and Chantry59, who are asking you about commodities. What do you think about oil? What do you think about gold? What do you think about other precious metals? Do you have an opinion on commodities?
Yeah, so if you look at the last 800 years of history and possibly a lot longer, commodities have on average given a real return of 0%. So it's sort of like if you invest in a property or a company that, either gives you an income from your tenants, or the stock, produces profits and growth year after year. But if you buy a commodity, you just have a commodity, and that commodity stays a commodity and sort of preserves its value, but it doesn't actually make you anything extra. So that's the sort of long-term case. So sort of if you invest in a stock, you're gaining, the market average of 7% plus your skill plus minus your luck. So that'll sort of be the formula, right? With commodities, you're getting that 0% plus your skill plus your luck. So you're starting from a much worse point. Now, that said, there can be specific geopolitical risks. There can be, if you have an overall risk assessment of your portfolio, sometimes commodities fit very well in there. You see, like, if you just make a simple model where you say, like, there are these 8 scenarios that the future could really hold. There could be some of those scenarios where you say, like, wow, in those scenarios, oil is really going to go the different direction from stocks, and thus, I'll have some oil in there to counteract that risk. And there can be other times where you really just look at the geopolitical situation and the amount they can produce and the amount you think will be demanded, and think like, this is this is a time, just even without the hedging benefit, where I think this is a good time to have some.
Very good, very good. And I'm gonna go to our last question. It's from Will Marto, who asks, do you think that tech stocks are overvalued right now after the long bullish run that we've had?
I think it very much depends on the individual tech stock. I think some of them, they will, if you look back at the Industrial Revolution back in the day, there's a lot of sort of parallels with how they were scrambling from, should you focus on only one thing, or do you need to have some other things to compete with the others? And certainly many of the top companies back then, they grew massively, and they continue to grow, and they've been great investments also sort of a century after that. So I think, it's not just that because you've done well, you can't do even better. I think with artificial intelligence and other things coming up, we have, I'll be very, very sad to suddenly see Google develop a general AI and then not being a shareholder. So I think almost just for that, you want to be a shareholder. But there are other companies where I think, you're paying a very high multiples compared to the revenue, the profits, and the growth. And on those companies, it generally don't have those in the portfolio. Some of them I've had, and then I've sold them once they've reached those things. And there are others where I think, they're not profitable. And then the question is, there are some that are very profitable and some that are not. And the ones that are not, you have to sort of see a quite clear path to profitability, and also see sort of like who should be able to defeat them in the marketplace but won't be able to. And if you don't have those things, then I definitely think there's some that are highly overvalued, but I don't short sell. So I'm not short selling those. I just have the ones that I really believe can actually, deliver great shareholder returns for the long run.
Mm-hmm. I lied. I have one last question.
All right.
A lot of people are asking if when copying you or choosing to copy you, there's a button that says copy open trades. What do you recommend people should do? Should they copy open trades or start off clean?
No, they should definitely copy open trades. When you copy open trades, you invest in the same stocks that I have. That means that you get a similar portfolio to what I have. And then when I sell something, you sell it. When I buy something else for those money, you buy the same. So I think that's the way to do it. That way you get to have the same portfolio. If you just copy the new trades only, you don't really know what you're going to get, and you don't know why. I could be investing in something I think will not do well, but I'm only investing in it because it reduces my total portfolio risk. So then it doesn't make any sense for you to put your money in that particular asset. But whereas, I've constructed the portfolio that I wish to have, and that's always the one I wish to have. It's not based on what I historically have wanted to have. This is what I want to have my money invested in right now. So by copying open trades, you invest your money in the thing that I've invested my money in. I think that's the way to do it.
Just to make it clear for our audience, I don't believe you meant to say that you invest in something that you believe is not going to perform better. It could be possibly that you're hedging against another asset, something like along those lines, correct? Correct me if I'm wrong.
So I have some assets that I believe will do very well, and I have other assets that I bought more with the purpose of hedging.
Exactly. So that's the reason. That's why he's recommending to copy open trades. It's not that he's investing in something that believes will go down. So this brings our webinar to an end. Thank you very much for Jeppe for joining us today, and hopefully there will be more webinars in the near future. And I want to remind everybody watching to complete the survey that's going to pop up on your screen after we finish the webinar. It's very important and will help us out a lot. Do you have any last words, Jeppe?
Well, I think if you can always go on eToro and follow and just sort of like see what's going on. I have a lot of posts in there where I explain what I think about different things, which books I recommend. I answer people's questions in there, so that's sort of always a good starting point.
All right, thank you very much. Thank you everyone for joining us, and don't forget the survey. Have a wonderful night. Thank you very much again, Jeppe.
Thank you.